Welcome back to America Decides. All three major stock indices were up today after news about the United States and China announcing what appears to be a kind of easing, maybe significant easing of tariffs. Dow Jones, NASDAQ, S&P all up. And up a lot. It's a big day for traders. I want to bring to the table for the first time, but I hope not the last time, Idrees Kahloon. He's the Washington bureau chief for my absolute favorite magazine. They call it a newspaper. We call it a magazine, The Economist. It's great to have you here. I really do hope you'll come back. So give me your overall hot or lukewarm take on the importance of what was announced by China and the United States.
Well, markets don't like tariffs.
Right, of course.
This is not a revelation. But I think it was a better deal than people were expecting, clearly. The markets didn't think that much was going to happen in Switzerland. Something did, and actually was a lot better than they thought it would be. It's a reversion to 10% tariffs from China on America, 30%. That's a lot different from 145, 125. These were the levels that we had before.
Which was an effective embargo. Yeah. There was nothing happening.
Yeah, there was, I think there was a 20% drop off in exports in April. That was going to go even further. Businesses were going to have to reconfigure their supply chains. Now there's a 90-day reprieve.
And the market was happy about it because as I was listening to those who analyze the market and do so on an hourly basis, which I don't, were like, they're basically declaring an end to this war, that it's not going to happen and things are probably going to get lower and closer to where they were when President Trump was inaugurated.
Scott Bessent talked about this in Geneva. He suggested that the tariff rate might ultimately be somewhere between 30% and 54%, which is still a lot higher.
Still a lot higher.
Still a lot higher, but, relative to what they were facing before of 150%, it's a lot better.
And would 54% or even 30% get anywhere close to generating genuine revenue for the United States government that didn't previously exist and incentivize what's known as reshoring, bringing manufacturing or production that's in China currently back to the United States?
So there's a contradiction, right, where if you want manufacturing to be rebased in America, you need the tariffs to be on and you need them to stay and you need certainty.
90 days doesn't get that.
Doesn't get you that. So there are no supply chains that are going to be moving back here. You might get some tariff revenue, not meaningful enough to offset, say, the tax cuts that are also coming down the pike this time around.
And would 30% or 54%, which, as you said, the Treasury Secretary Scott Bessent indicated might be possible, that would be reflected in the cost of a lot of consumer goods Americans are pretty, if not reliant on, accustomed to.
Yeah, we might see, further exemptions for things like iPhones that customers face, but there will also be a hodgepodge of other tariffs on sectors like aluminum, semiconductors, these sorts of things. So it's going to be complicated for businesses. Consumers probably won't face the empty shelf problem at a 30% level. That's something that businesses will be able to tank, even though the cost will be passed on. But I think what we might also see is that, this idea that you mentioned earlier of, decoupling from China, moving to Vietnam, India, these other bases, that'll all depend on those negotiations, right?
Right. And if you settle with the Chinese first or get to them first, what incentives do those in India or Vietnam or elsewhere have to think that the leverage the president talked about is true leverage?
Right.
Because it appears that this is a backing away on the administration's part. They started this conversation. They now appear to have backed substantially away from it.
Yeah, the Chinese are interpreting this as a win for them because Xi Jinping was defiant. He was the country that imposed retaliatory tariffs. He imposed these restrictions on rare earth minerals, and he got the president to back down. And that's being seen in China as a victory for him. Other countries, will not have the heft that China does, but they see this as, Trump's commitment is not as ironclad as they thought, and the markets clearly believe that. Otherwise, they wouldn't be as high as they are today.
And quickly evaluate what was ballyhooed last week that the markets were not all that impressed with, the UK-U.S. trade deal.
Right. Again, that is something that takes the UK back to 10% trade deal or 10% tariff rate, which is a lot higher than it was before. In fact, it's higher than when they started. So the UK offered us concessions. The US is still giving them a 10% rate, and that's for a country that has a trade surplus.
Right.
With America's sending more than it's receiving. So for a lot of countries, it wasn't seen as great. And also, it's the first deal that was cut out of maybe 70 that need to be cut with America's closest ally. And so I think that this led people to think that the further deals were not going to be all that much either.
And what about this conversation with China, how you've given us a sense on how Xi Jinping is interpreting it, and certainly how state-run media in China, one and the same, is interpreting it. How do you think those with the European Union are interpreting it and the future of negotiations with this administration?
So the Europeans don't want to escalate in the way that China did, but they're ready to. They're preparing a measure of packages. If these reciprocal tariffs go back into effect, they want to hit us where it hurts, and they think that they know what those sectors are going to be.
Meaning super high-profile, well-liked consumer goods that Americans purchase as imports from European Union countries.
Absolutely, and things that we export to them. You know, bourbon is a favorite of them because it's made in Kentucky, my home state, but, you know, other areas as well.
And if you were to offer a sort of summary of what this month and a half has been in the trade conversation with the Trump White House 2.0, and that's not an easy thing for me to ask you, but if I were, how would you answer that?
It is, I think, the end of the free trade order. We had a scenario in which tariffs were really low, close to zero. Now they're back up to, even now, levels that are as high as they were in the Smoot-Hawley tariff days that preceded the Great Depression.
That's right.
That's a century that's really kind of changed.
Idrees Kahloon of The Economist, thank you so much. Please come.